I'm Ben Folkes, the CEO of Raywhite Canberra. I want to take this opportunity whilst we're all continuing to work through the challenges thrown up by COVID-19 to share with you some of our recent learnings, three in particular. The first around JobKeeper and what that's likely to mean in the short to medium term. Secondly, around the situation to do with rents, both residential and commercial. And finally, what's happening in the world of finance, where it's never been more important not only to have a broker on your side, but a great broker. So when it comes to JobKeeper, some things have been made a little bit clearer, which as a small business owner, we're certainly appreciating. The first is how they're going to calculate the drop on revenue. So that's got to be month on month for a like period, say May this year versus May last year, or quarter on quarter if that's a better measure. The advice that we're getting is that really the government wants people to be able to access this benefit. So there's going to be some negotiation with the ATO. Obviously, the end outcome for this is that more people stay employed at sometimes a comparable or higher rate of pay. There's two other things that we've learned. Firstly, it's going to be paid in arrears. So businesses are going to have to cash flow that salary for at least a month to carry that forward before they can claim it back. And secondly, there are going to be reporting requirements. So JobKeeper is really set up with the aim that people don't game the system. And directly off the back of JobKeeper is the situation for our tenancies. In the commercial sense, they've released a set of guidelines around how that's to be dealt with. Effectively, you consider the drop in income of that particular business, and then that gets split between a rental waiver and a rental deferral. We're really happy to have some conversations with people around that because it is unique to each set of circumstances. In the residential space, it's more of an individual negotiation between the tenant and the landlord. Now, we've facilitated a number of these. However, pleasingly, there's only been 18 across our portfolio of 914 residential homes that we manage. So just under 2% of people have needed to reach out. Our rental collection as of the middle of April stands at 94%, which is quite typical for this period of time within our portfolio. So people are stepping up and meeting their obligations, which is really great to see. Thirdly, it's all about finance, and whilst now may not seem like an obvious time to reach out and have a conversation with a broker, it's probably never been more important. We've found discrepancies between banks of up to $200,000. So with one particular scenario that we were running, one lender was providing finance up to $869,000, whereas the other was only at $688,000. That's such a significant gap for a potential purchaser. Another reason why you would want to consider having a great broker in your corner is the turnaround times. So to give you just one example, one of the major bank lenders will offer general brokers turnaround times at the moment of around about 21 days. However, if you're recognised as an elite broker, you get a fast track, which gives you an approval within 2 days. Now that's an incredible ability to provide confidence for our potential buyers, knowing that we can save them that 3-week period of uncertainty where they're waiting for that finance approval to come through. And really, finance at the moment is all about confidence. An average broker might get 70% of their deals approved, whereas our in-house finance specialist sticks at a rate of 96 to 98%. We're here to support you whether you're a home buyer or even just looking to refinance and make sure that you're in the best financial situation possible whilst we navigate these challenges together. Like everyone, we're operating in a very fluid environment here, but we're certainly doing our best to keep our people and our clients well informed. I look forward to talking with you again soon.